Welcome to Trading Lounge and the Commodity Futures Report for Monday, October 3rd. I'm going to run through some of the US sectors very quickly first, okay? But before we do that, I just wanted to have a quick look at the Vanguard emerging markets. So I do see the Asian markets to come down further. So looking at this particular pattern here, which covers some of the China, Brazil, Taiwan and South African markets in here. So we can look at this as an A wave here, an A, B, C, D and E for the B wave here, and then down for the C wave, because we can't look at this as wave one here because we're moving past the 61.8%, so we're going to see a deeper move for this particular sector. Okay, so now we're going to have a look at the US sectors, just to paint a bit of a picture. We have looked at them before, a week or two ago, and yeah, it's just good to so this is the finance sector, the banks, and with the banks here, we're looking at, from the top here, we're looking down as an A wave and a B wave here. And then we're looking down as 1 and 2 and 3, 4, 5 here for wave 1 and 2. And then we'll be looking down at wave 3, 4 and 5 down further for wave C. Now, I've got this as wave C of 2 here, but that may not be the case either. We may be looking at something, a larger wave 4 pattern as well, but we'll just continue on our journey here. We've been, we were looking for the high of wave B, and we've traded a lot of the banks down. We're still short in the banks at the moment, and with the banks, it's really this wave over here that we want to be looking for. This is obviously going to move quite quickly here, being a third wave, and obviously something will be occurring in the global markets at that point for that. Now, with the finance sector, the finance sector is obviously quite central to all the markets, because that's the repo market, the financial engine really for the economy. So normally when you have a bear market, the banks are the first ones to come out of that. So we'll be keeping a close eye on that. But our main focus for the finance sector is shorting the banks in this leg here. We've been short in the banks since about here with these, and we'll just continue to that. But this is a really good template for the rest of the markets, basically, and nothing's really changed on that front here, the metals and the mining. So we're looking same again, the A wave, the B wave, 1, 2, and then we'll look down here. We'll look for the wave 1 and 2 and 3, 4, 5. So looking further down, as you can see too, I mean, a lot of people will have this here once it comes down as the low as an A and a B and a C wave here. But my case for that, and if I can bring the finance sector back here again, this particular leg here will be too small in comparison to this leg over here for that. They don't sort of match up, where normally wave C, wave A and C will have some sort of equality to them. That's not the total story, but it's just what I'm pitching to you right at the moment. So of course we will look at these lows here as possible lows in the market, but it's not going to distract me from taking this count here as well and being prepared for this third wave down here, because this is payday, this third wave of this degree. And moving along to the discretionaries here, the same thing again applies. You can see this leg here is just too small to be have any relationship with this larger leg here. It makes it a little bit obvious. And with markets, there's always leaders and followers, and this is a following market where the Nasdaq or the tech stocks are leading to the downside, and we'll see that in a moment. But the pattern here is very clear. We can see 1 and 2 here, and then if you've got a keen eye, you can see 1, 2, 3, 4 here. So we're going down into the third wave, the fourth wave, and the fifth wave, exactly the same as the S&P and the NASI. So it'll be this wave 2 here that will be the exciting news. It'll be it will fluff around down here just like this here and retest that and eventually drop and be pulled down. So the tech sector, you can see the tech sector has taken out the low here where we're just looking at the discretionaries and it's still up here somewhere. But once again, the same thing again, 1, 2, 3, 4, 5 for 1, back for 2 and down for 3 at that point. So yeah, definitely the leaders tend to have more range and they're the ones that you want to short. So you normally find a sector, the leading sector, and then find the weakest link stocks in that particular sector and short those ones. The industrials the same as well. We've got 1, 2, will be coming down for 3, 4, 5 here, a bit of a bounce around the 80 and back up and then down at that point for that industrial sector. The healthcare is a bit more sort of stable, but we'll also be looking for this will be basically the pattern here, looking for this, and then it'll be a retest of supply for wave 2 and then moving down at that point. So everything's going according to plan for that. The energy sector here, I mean, it's a little bit of a tricky one because obviously we all thinking that crude oil should be going up because of what's going on, all these sorts of things. OPEC Plus are thinking about tightening the the oil supply up, so basically considering to cut over 1 million barrels a day. That sounds like a lot, but it's actually not. It is and it isn't, I guess. So that's just a bit more, put a bit more pressure. It's just not OPEC, it's OPEC Plus. So it is the Russians, and want to put pressure on those sanctions that have just been applied as well. The situation over there. But I have to say, with this energy sector here, my thing is that I'm not here to give opinions about political things or economics or any of those sorts of things. I mean, they're all fantastic and interesting and everybody loves talking about them and so on, but my job is to count waves, and as far as I can see here is I can see 3 waves up here. I don't see 5 waves up here. So that means that I need to take out this low here for this. And if I take out this low here, then this sector here should be in line with the other sectors. So that means that 1 and 2 here, 1, 2, 3, 4, 5 for the third wave, the fourth wave, there may be a little bit more in there. We'll have a look at ExxonMobil in a minute. But yeah, so another move down here for this. And I'm thinking that I know most folks will be thinking they're going straight up at that point. I just don't think that's the case. I think that we'll end up having some sort of situation like this and coming down for a third wave over here. I mean, that's typical of the markets, isn't it? You expect one thing and it delivers another. Anyway, we'll be aware of this situation for that, and the biggest constituent here is ExxonMobil. So I thought that I had ExxonMobil here. I'll just have a quick look. Just hang on a second. Okay, so this is ExxonMobil on the just on the 1,000 ticks. So basically that A wave or that B wave here, and coming down here for wave 1 and 2. So that will be the A wave here, and you can really see that from this low here, there's a very clear 3-wave structure here. Yes, it's possible that we could have, we've got 1, 2 here, 1, 2, 3, 4, 5, the third wave, the fourth wave. So we should have a 5th wave down here. But what happens if it doesn't take out the low here? You're going to call that a truncated C wave, yeah. But I think that will end up having that as a wave 2 coming back into this space here, and it's interesting. I mean, you've got to kind of get your head around why wouldn't an oil company go with crude oil and make new highs for crude oil and all the rest of it. They can go in different ways. That's not new. So anyway, it'll all be quite sort of interesting. But as far as I can see here, this wave 4 here is not complete, and we need to come down for wave 5 here. So that's going to be important for when we look at crude oil, and we'll get there in a moment. But before we get there, we want to cruise over and have a look at the yields. So so the 10-year government yields. So we were looking, our first stage was counting 5 waves up off the low here. We don't have 5 waves here just yet. The 5 waves should take us to the 5% at this point. So I think that, I mean, we know that the Feds are really sort of sticking to the plan, and you know, yeah, I mean, I don't want to talk about economics of it all, but basically I can see 5 waves moving up to here, and then we'll have a pullback, and then we'll have another 5 waves up. So I know that that will take us to 8% or even 9 or 10%, depending on if this becomes a third wave up here. That will definitely, you know, it will do something of that nature. You know, my concern, as I've mentioned before, we can have this wave 1 or wave A here, wave 2 or B and C here. It could be an A, B, C, and then everything just chills out and the world is rosy again. But you know, I can't see that sort of happening, really. You know, America is struggling to pay its interest on its debt. You know what I mean? And I was listening to Peter Druckenmiller the other day, and he does his homework, and you know, come 2037 and 2047 and those sorts of things, and there won't be any money there to pay the, you know, Medicare or discretionary services in the US. So there's I don't know, there's some pretty serious stuff going on around around the world. So this 3-wave move here could certainly turn into a 5-wave move, and if it does turn into a 5-wave move, that means we'll get a correction and another 5 over this side over here. So that means that the 87, 82 high over here would be breached. You know, I mean, when you look at when you look at the world, you know, especially coming, you know, back in history, there's a really good website called What the Fuck Happened in 1971. So just full of charts that were put together by a Bitcoin person. Definitely worth a look at that website. So anyway, that's all of that, and this is, and the reason I'll lead into this is because about the US dollar, really. You know, we know that there's a dollar shortage, so that's putting a lot of pressure on other currencies. As far as this goes here, at minimum we can look at this here as 1 and 2 and 3 and 4 here, and going up for wave 5, trying to find a top here. We'll talk about that in a moment. But that's 5 waves up there. So, you know, the natural thing to do would be to have, if that count was right, let's just assume for a moment that it is, well, then we would have an ABC correction coming back, checking support, and then pushing up again. So we would have 5 waves to here, a correction, another 5 going up there. So that's all doable, especially when you look at the you know, the yields that we've just been looking at. The next question is that count right? Is that 1, 2, 3, 4, 5 here? Well, I'm kind of questioning that now, because this wave, because I can see what's happening with the yields. If they're going to go up, then this is going to go up as well. So then I've started to question this, which, I mean, I've always been aware that this wave 4 here overlaps the top of wave 1 here. So maybe that's not such a good count as a wave 4 here. Maybe we can count this differently as 1 and 2 here, and then 1, and then 1 and 2, either to here or to here. Or we could count this as 1 and 2. So I've got to build a case here anyway. So I don't have any answers just yet for any of this. But I do feel quite strongly that this has got further to go up here. This current price here, this is 11,500. It's probably pretty meaningless to you, but to me, in terms of the trading levels, it's halfway between 2 major levels, so 10 and 13 here, using Fibonacci as a price ratio. So the 11,500, you can have a look at stocks at $11.50 and all that sort of stuff, and you'll see that it really kicks in. So I'm expecting some sort of classic trading levels pattern at that level. So this is the level here, the arrival where we've got now. So I'm looking for the first high above the level. If we get this over here as support, then we will look, we'll go there now on the 2K, then we need to, then we'll be looking higher. So from this wave 4 here, I'm looking at 1, 2, 3, 4, 5 for 1 and 2, and then looking at this here as 1, 2, 3, 4, 5 up here. And then this is basically from wave 2 to wave 3 here. This is basically the 38.2% retracement level. Well, pretty close anyway. So, but it shouldn't come any lower than that. So that's a 38.2 here. So it's a bit lower, which is nice because it kind of helps me think and say to myself, well, it's already reached that number with, and it's got a nice ABC pattern here. Of course, this wave 4 could get more complicated. We might need to put it over here. It might end up being a B wave over here and yada yada yada, all of that sort of stuff. But essentially we should look at this as 1 and 2 and 3, 4, 5 to move up here. So this is the classic trading levels pattern. So we've had the arrival, we've had the reaction, we'll get the first high above the level, right, in 5 waves coming up here, and then well, I'm just going to be patient. I won't know I'll know like kind of on an intraday basis sort of what's going on here, but this is the pattern that we'll get. But I can say to you, if that top here gets taken out by another move up here, then we've got a much bigger pattern in the US dollar happening, and we'll see much further upside. I don't know if we're going to get that, but that's basically what we'll be looking for. We'll try to work out, like if I get 5 waves in here, that's not very helpful. The A wave can have 3 waves, all 5 waves. If it gets 3 waves here, then I can straight away tell you that we'll be taking out the top. But if we get 5 waves here, we're going to get another 5 over here. If we get 3 here, we can still get another 5 over here as well. But if we get 3 here, anyway, I've got to work out if we're going to get, if this pattern is corrective. If it's corrective, then we need to extend this, and we'll be going up much further at that point. So that's going to put a lot of pressure on commodities and everything else. I mean, this is, like I said, I'm not an economist, but this is basically going up. Why the others are going down is because the US have raised rates the quickest and the biggest and the fastest and all the rest of it. So why wouldn't you put money in that, compared to the other ones that are, you've got the Bank of England. I don't know if they're Arthur or Martha at the moment, I mean, the Bank of England kind of know what they're doing, but the politicians are doing their job as well, but the whole thing's not sort of coordinated of where that money they've spent is coming from and all that sort of stuff, as we all know now. So yeah, I mean, these guys are putting their rates up the quickest, so they're getting the stronger dollar. So anyway, that's that. Over to the commodities, over to the gold market here. So in a bit of a nutshell, we're looking at this as being wave 3 here, and then an A and a B and a C to keep things kind of simple. It hasn't been the easiest move down through here to track because of this little spike in here and a few other things, but I'm quite happy with the wave 4 here. I know we could go into a bigger bearish picture here, but I'm quite happy with the wave 4 here because this first move down through here, if that was a really beautiful 5-wave structure down here, then I would be a little bit concerned. We could look at it as wave 1 and 2 back here, but it's hard to look at this as wave 2 here because this is so big compared to this here. It doesn't make any sense. And this light plays better out as a corrective pattern. So as an A and a B and a C, I think it's okay in terms of pulling back to the 38.2% retracement level here, where this is it here coming through here. So we're a little bit lower here, but that's okay. We're working with a large number, the 1650, another medium level. So I'm thinking that we've got one more little move down here to finish this off before we move up, and that will be the same for gold stocks and GDX, which I won't show today because we've got too many charts to do. But yeah, so that's that. So just sort of cutting through onto the tick chart here, 10K tick chart. I was sort of thinking about it like this wave 4 up here, and counting down as 1 and 2, and 1, 2, 3, 4, 5 for the third wave, and ABC for the fourth, and then down for the 5th. Now, obviously, this needs to come, looking for it to pull back to the wave 4 of 1 lesser degree. Look, it may be finished. There may be one more little move up here, but we're still looking for stocks to finish off with one more move down here to finish this off here. So even when we get down here, I mean, if it doesn't run away on me and go all the way up here, well, I mean, we'll keep an eye on that and adjust things as need be. But this is what we're looking for, another 5 waves down here, and that will be the same for GDX and stocks and all of those sorts of things as well. Now the silver market, just going into the weekly chart here for a moment. So yeah, I mean, this is a market unto itself. This short squeeze in here when I think, I can't remember which bank had all the short contracts when Morgan's had to buy the bank off. Who did Morgan's buy? I can't remember now. But anyway, they had all that company had all the short contracts, so they will be sort of squeezed out. They've probably still got the Morgans have probably still got them as well, all that paper. Look, the thing here is it's a little bit of a tricky thing to count, to be honest. I prefer to take the count to this particular wave structure here. This is when the Wall Street bet guys came in and gave a bit of a squeeze here as well. Because it was so sort of short-lived and it was a bit of a news thing, and that I'm a bit reluctant to count it in. But even if I did count it in, it would, from the low here, it would still be a corrective pattern to this point up here as well. I could put it as wave 5 up here as a top. But yeah, I don't know the best way to count that, to be honest. I mean, I just don't like spikes. All that said and done, if I had just counted it here as an A wave here, and then an A wave, a B wave, and a C wave down here for the B wave. So an A wave, a B wave, and a C wave over here for this. And, you know, I don't even know if this is going to play out like this either. So, you know, I need to be a little bit careful. I could easily be wrong here. I haven't really had time to mull this over, to be honest. But even so, if I took this as the B wave here, I can look at that as 1 and 2. And then we've got a nice strong third wave down here as 1, 2, 3, 4, 5. That's good. And the fourth wave here for this. So I'm thinking I could put the fifth wave here and have a low in here, but you would have to say, along with me, is that the length of wave 1 and the length of wave 3, and then you got the length of wave 5, it's a little bit small here for that. So yeah, I'm thinking that we got a little bit more downside. We're at the 61.8% from that low to that high here, so we should find some support here, which we are, and we can see that. But I would only turn long here if we can get a classic trading levels pattern sitting on top of the $20 mark here for this. I won't go into the intraday here, but I'll just see how this I just want to have a look at the bigger picture first. But yeah, you know, I mean, for me, I need, for a trade setup, I need that level, that price point as a nice, strong, sturdy setup there, you know, something that's sitting on top and we just buy new highs at that point, you know. So that's what we would need here to go long in the longer term. And there's a lot of, you know, if the dollar's going to push up, that's going to put pressure on this as well. So, you know, we'll see how that dollar turns anyway at that 11,500 above that. Okay, over to some of the other base metals here. So we'll look at lithium, copper, uranium, and nickel. So in this case, we're looking at lithium pulling back here much deeper. So yeah. I mean, it could stop. We could look at this as an A and a B. I can count that up as 5 waves to that point. So I could look at that as wave 1 with an A and a B and a C, but we'll need to stop just here for that and then go up from that point. It's possible. So we'll keep an eye on that. We're looking at a lot of lithium stocks, some on the New York desk, and mainly stuff from Australia in the Australian video. So if you want to follow those, then that's where they are. I didn't do them today. I forgot about them actually today, but I normally do them every day. But they're correcting, and they're just not ready to buy yet. You know, we could see that they had to top out and turn, and I won't go into those today here. But that's where you can see them. So I'm looking at this as an A wave here, an A and a B B and a C for the B wave, and then getting some sort of move down here, probably even lower really for this, you know, because we want some sort of, you can see the size of this correction. Yeah, and then the size of this is still too small, isn't it, really? And then the size of this leg here, so we'd kind of want that over here for that. So, you know, this could be a series of 1 and 2 and 1 and 2 and 1 and 2, and it's like a third wave coming down here. So, you know, there's going to be more. Obviously, it's going to get support at 65, which is a medium level, halfway between two major levels. Another weird number like 1150, but once you get the hang of them, they're pretty handy to understand. There will be more support coming in here, fluffing around here, so we'll see how that sort of plays out. So pretty sure it's going to come down further with all of this, and that's what we're seeing on lithium stocks. Uranium will basically be doing the same. It's got the same sort of pattern as lithium here, so we'll see this, you know, it's just retesting and spending some time at 20, and it will do that and then drop from that point. It's possible once again to count that up as 5 waves, but then it's a bit difficult to count this like this. So, but as 1, 2, 3, 4, 5 for the A wave, and then an A and a B and a C wave for the B wave, it kind of makes all this fit. So an A, B, C for the A wave, and A, B, C for the B wave, and the C wave down here. So we would need to see, you know, something like this leg or this leg here over here. So we'll probably end up seeing this down at $15 or something, you know. But anyway, there's no, I know it looks like a buying opportunity here, and I'll pay attention to that on the intraday videos that we do with the Australian market. But yeah, not, I don't see it. I don't see the situation yet to buy. Copper, this is US copper here. Yeah, I mean, this has always been a bit of a tricky one too, because of this thing here. I mean, normally you just look at this as wave 1 and 2, and then 1 and 2, and then the third wave, and we may need to look at it like that. I've tied it in as 1 and 2 here, and 3 and 4 and 5, because normally you would expect wave 4 to be in the complicated one, but if wave 2 is complicated, then wave 4 is going to be simple. So it does count okay as a third wave here, fourth wave, and a fifth wave here for this, but it still leaves the wave 4 here at pretty close to the 38.2% retracement level. This move here is in 3 waves, so it looks corrective, so it could move up from that point. I can't look at that as 1, 2, 3, 4 and 5, because wave 2 here is really overlapping wave 1 here. So I think that we're on the right track here of this coming down further. Yeah, but I just I don't want to go. You could go short under here if you wanted to. To go long, I'd need to see this top get taken out here, because otherwise we'll need to look at this as 1 and 2 and 1 and 2 in here. So yeah, so it's got a bearish bias, but the bullish factor here is that you can count 5 waves to that point, and we're looking at this as an A and a B and a C to that point, and we've got 5 waves up here as well. I mean, I could really even put wave 4 over here based on that 5 wave move here as an A and a B and a C to here, and then look at this as 1 and 2. There's a few ways to look at this, but certainly not going to go long on BHP or any copper stocks just yet. We need much more information before we can do that. So yeah, the pressure's still to the downside, and we'll leave it at that. So this is nickel. So we've been also looking at this in 2 different ways as well. We looked at it as wave 1 and 2 and 1 and 2, but the problem with this was, as a wave 1 here, that was fine. Wave 2 was really too big for wave 1, so it's better off as a B wave. So we just waited, and it's just rolled over. And last time we spoke about this, we were looking for that rally. So that rally's come out now, and it's really testing that low here. So this could certainly play out as 3, 4, and 5 coming here. Normally the third wave comes in across the bottom here, so we could probably shore that up a little bit here. But you know, you get the picture of 1, 2, 3, 4, 5 to move on down here further for all of that. I'll just remove these, we don't need those, but bit of support on that trend line there. That was why that was left there, but that should that will be 1 and 2 and a little third wave here. So we're going to see some sort of bounce here and then come through and check it back again, and continue its journey to the downside. It'll be on that sort of pathway there. So not a time to buy nickel stocks at this stage. And okay, over to crude oil. So this is 5,000 ticks. This is across the $80 here. It says 8,000. It's a CFD product. In a bit of a nutshell, if that top here got taken out, nice clear breach of that top, then it would have a bullish pattern from the low here, because at the moment we could look at this as an A wave, a B wave, and a C wave up here. So if we do get another move up here, then we could look at this as 1 and 2 and 3 and 4, from here as an A and a B and a C, or we could look at it as 1 and 2 and 1 and 2 here, and then continuing up to there. But I want to wait for that as well. I need to prove that to myself with this, because it's possible that there's more downside here as well. I mean, it's done everything that it should do to be bullish. It's come through the level, tested it, dropped down, gone back up. So it's doing everything to be bullish, and normally would go long above. Well, if I had to go long here, I'd go long above that top there, because that there would be the A wave, the B wave, and the C wave at this point. Doesn't really give me a nice impulse wave here, but you could probably do a workaround there as wave 1, an A and a B and a C wave here for that. But this could just fade from here and mosey on down. We don't know that yet, but taking that top out there would give it a bullish bias at this point. But I'm not prepared to go there just yet on that, on the monthly chart. So yeah, I mean, if we were looking at that as wave 1 to the upside, it still hasn't pulled back to where it should be pulled back to here. So I think there's still more room to the downside. Let's go to the weekly chart. You can see it a bit better. There's still more. There is space to the downside, and I have to say, counting this down here, look, it's not an easy job. Look, when I say that, I mean it could be counted in different ways. It's not just a simple. Some of it's easy to count. The first 5 waves are easy to count. This structure in here is easy to count. This is probably an A and a B and a C here. It gets a bit complicated. Then this is ending up in, it hasn't ended in, from this high down to here, it hasn't ended in 5 waves. It's ended in 3 waves. So I'm thinking to myself, well, that can't be right. I mean, it could be, in an ending diagonal triangle and all those sort of things, but I don't like to toy with those unless I get, another layer of evidence for that. So to me, this has still got a possibility of coming down further, right? But I don't know. I can't say at this particular point. I don't don't have anything. The weekly stochastics will give you the buy point, but the monthly will tell you it's still cruising down as well on the monthly here. It's still space for it to come down. So I'd need a fair whack of, I need a really good setup to move into that. And over to the natural gas. We've been running a few counts on this, as you know, and I won't go into them all because I want to keep the video as short as it is, but this was one of the counts where we had the top here is the A wave, and then an ABC for the B wave, and down for the C wave. So it does look, whichever way you want to count this little move in here does appear to be an A and a B and a C wave to here. So yeah, I mean, it's pretty close to the 61.8% as well here. So for the bullish count, we're below that. Anyway, I'll check on it tomorrow. We'll update this in the Australian market. But yeah, I don't see a nice clean move for this at the moment. I think, what do we have that on the 10k tick chart for the bullish move, didn't we? Yeah, I remember doing some work here for this. So basically we were talking about if this low here was breached, then it would be bearish at that point. We also talked about bringing it down to the next one, but I can see here that we've got an A wave here, B wave here, and a C wave here. So this is 1 and 2. So we're probably, you know, come down further. I tried to give it every possibility of being bullish. You know, I didn't want to wipe it off. But look, if we get some sort of nice, you know, if we look at this as wave 1 and 2 here, and then we get a nice little 5-wave structure up here, well then we're not going to miss anything, because it will pull back 40, 50, 60%, but we need to count that 5 waves first. And having one 5-wave set here is not enough, you know. It can be part of a corrective pattern, as I just mentioned. So we don't have a bullish long trade set up here. But if you want to go long, the safest thing to always do is buy new highs. So, you know, we're getting these lower highs here. So if one of those got breached, that would be something. But otherwise, you need to really consider this moving down further. Alrighty, I'm going to leave it all at that. Thanks for tuning in. Cheers.